This is the Carl Miller Show, where we talk about all things real estate, financial investments, and getting into a home you love. With over 15 years of experience, this is your host, Carl Miller.
Real estate investing for beginners and 5 skills of successful investors. Today we talk investment real estate. Thank you for tuning in. I'm Carl, your host, principal broker of Carl Miller Realty. We're Lynchburg's first certified full-service professional brokerage. We're located at 7700 Timberlake Road. We are your caring, competent, trusted advisors for real estate sales and service. If you are a homeowner or an aspiring homeowner, this show is for you. And we're in a network of the best agents in the United States and Canada who operate with skill and with a relational approach to meeting your housing needs. So whether relocating to or from South Central Virginia, we've got you if you are looking for an agent outside of our market. Hey, it's America's 250th birthday, and our office is giving away a really cool Independence Day gift cooler, basically. It's a cooler stuffed with all kinds of goodies. We'd love to give that to you as a listener. If you would like to enter that giveaway, just go to our social pages at Carl Miller Realty, and it should be pinned up on top. You can find that post pretty easily and just follow the instructions there to enter for your chance to win a really neat, I believe it's going to be a Pelican cooler we're giving away. It's pretty sweet and filled with lots of goodies. Sierra has that all put together. I want to thank our sponsor, Gary's Garden Center. You know, spring, it's in full bloom. Actually, it's pretty much summer now. Summer's in full bloom at Gary's Garden Center, and they are ready to help you create your own slice of paradise so you can get your own tomato, maybe admire the vibrant blooms of your favorite flowers or the fresh scent of lavender from your garden filling the air. Whether you're a seasoned pro or just starting out, Gary's Garden Center, they've got everything you need to bloom and grow. Great selection, expert advice, friendly service. Visit Gary's Garden Center at 794 Leesville Road today and mention you heard about them on the Carl Miller Show.
It's time for a new featured listing from Carl Miller Realty.
Well, we've got a great house in Somerset Meadows. This is in Forest over off of Route 811. It's near the Poplar Grove Golf Course. This unique 3-bedroom, 2.5-bath home offers the convenience of all main level living. Every single square foot on this property is on one level, 2,108 square feet. Lots of cool space in here. There's actually a really nice welcoming front porch. There's a private patio and a bright sunroom in the back. There's a good dining room in this house. The best thing about this home is everything is on one level. There's no steps, even coming off the garage. And it's listed for just $519,900. It's located at 1263 Somerset Drive. You can learn more by going to carlmillerrealty.com. Well, let's talk about real estate investing today and talk about the industry a little bit. So $230 trillion, that's how much value is in real estate investments. It's the world's largest asset class and one of the most entrepreneurial fields. It draws in people with the promise of predictable long-term passive income, positive returns on investments, and favorable tax advantages. Again, $230 trillion. Because real estate is often considered a low-risk investment, many are just quick to jump in with expectations of turning a quick profit. Popular television shows talk about buying investment property, flipping houses. You know, it kind of feeds on this idea of fun and easy money in real estate. But not all real estate investments are low risk. Some do require specialized real estate skills. Many require patience and time to realize a positive return on investment. So if you're considering becoming a real estate investor, this is a little bit of a show for you. And we'll talk about 5 skills needed for a successful real estate investment career. So let's talk about the types of real estate a little bit. Not all real estate is the same. You know, properties are zoned for specific uses. So before you become an investor, understand a little bit the different types of real estate and typical zoning regulations, because we are all under different zoning guidelines. And obviously, guidelines and zoning changes over time. In fact, at Virginia, we've got new laws coming down. We talked about this on a show recently about ADUs, the by right uses of putting on an accessory dwelling unit on your property. That's brand new. That'll be brand new in 2027. We've never had that opportunity in Virginia, where it'll be by right, and you can add another dwelling on your property, 50% or less the square footage of your existing property, for example. That gives a lot of people who would maybe never consider becoming an investor in real estate to earn some passive income on their own property, it opens up that door, takes down some barriers. But let's talk about the different types of property. So basically there's three just broad brush strokes types of properties. So again, let's talk about three types of properties. So residential, that's residential real estate. That's property that's been specifically zoned for living in, primary homes. This includes single and multifamily homes and apartment buildings, but it's zoned residential. So the type of investment that you'd be doing in residentially zoned properties is residences. And then there's commercial property. Now that's real estate that's been zoned for business. It's typically industrial, retail, small businesses, office spaces, different types of zoning, and there's different levels of zoning. Locally here we have B1, B2, B3, all the way up to B5, and then there's industrial type zoning. But just broad brushstroke, commercial property that includes shopping malls, office buildings, warehouses, manufacturing sites, and it could be as simple as just little office spaces. And then the third type of property is land, and that refers to ground surface. And it extends, by the way, both below the Earth's surface and up into higher airspace. And it encompasses any structures, water, plants, or minerals located on the land. Land can also be zoned as residential, commercial, industrial, agriculture, or other specific local zoning designations. And developers, they may petition local governments to change the zoning laws for land they own or land they want to buy. We see this all the time. If you are following the public notices, if you go to any county website, probably even Lynchburg City right now, there's public notices for special use permits and or rezoning proposal changes. These hearings happen all the time at our local government where a party will want to buy a particular property, change the use of it, and by doing so, there's public hearings about allowing that to happen or not. But there's always zoning laws being changed in order for a buyer or an existing property owner to change the permissible use. So the potential career paths for real estate professionals, there's a lot of career paths in real estate, but know that there's a difference between investing in real estate and working in real estate. When you work in real estate, you don't put your own money into properties. Instead, you're selling properties for different owners. That's what real estate agents do. It's what real estate brokers do. Real estate development companies or investment groups, they manage properties or help finance properties. So kind of two ways you can get into the real estate game. One is be a real estate agent. And we've had, that's how I started 21 years ago, started selling properties. If you want to be a real estate agent, a couple of things that you really want to be responsible for and have skills in is understanding local markets, marketing properties. You're going to be advising your client on how to market their properties, how to make them attractive. We talk about a lot of these things on our show, staging homes, suggesting cosmetic upgrades. You should also have the tools, experience, and contacts to make market properties, I should say, to a wider audience. And then obviously be pretty proficient at handling paperwork and negotiating through the transaction and being able to communicate well with the other parties in a transaction. There's lots of moving parts and lots of parties in a transaction. You always have a seller and a buyer at minimum, but then typically there's another real estate brokerage involved, and then there's lenders and title companies and appraisers and lots of moving parts, lots of communication, lots of contractors, home inspections, all these things. The other way you can get into real estate is being a property manager. And property managers, they're typically hired by property owners to manage the day-to-day property operations. So responsibilities as a property manager could include, finding prospective renters and collecting deposits and handling maintenance requests and checking on properties for owners, especially if they live out of the area. A real estate investor, however, the difference between being a real estate agent or a property manager and a real estate investor is real estate investors, they're putting their own money into properties in the hopes that selling that investment for a future profit or for putting their money into an investment with the hopes of getting cash flow or return on that investment on a monthly basis or an annual basis. So if you choose to be a real estate investor, you could own one or more properties, or you could also pool your money with other investors into a fund that includes several properties. That's known as a syndication. You earn money when properties in the fund are sold. You can also earn income from the rental of a property while holding the asset. as an investor, you could have a full-time job in a different industry or invest in other types of businesses as well. So earning money as a real estate investor is something that's really fun to do. You talk here about passive income, and I just want to dispel the myth right now that I don't think there's any such thing as a passive income in real estate. I think that no matter what, if you're in real estate, it's not passive. I tend to use the term horizontal income. So in other words, you're getting income from a project or an investment that's not related to you having to necessarily show up to the office or showing up at your place of work. So I think of things of vertical income and horizontal income because I think that there's no such thing as passive income when it comes to real estate, because I promise you every single piece of real estate I've ever owned has required some of my attention and time to some degree. Even if I have property managers managing it for me, there's still distractions. There's still that call that comes in saying, hey, we just found termites. We need to treat. This is a $2,000 problem. Can you write a check? I mean, there's no such thing as just simply just letting it all happen passively. It seems like there's always active things going on. But here's how you can earn money as a real estate investor. There's lots of different ways, but I'm going to hit a few of them today. One of them is appreciation. We've talked about how our market has been going up in value, and real estate generally appreciates in value over time. Your profit comes from selling a property at a higher value than what you bought it for. Savvy investors, they'll buy properties in neighborhoods or locations that are kind of maybe a little bit below market value, or they're in neighborhoods that are changing and they're up and coming, and their property appreciates at a higher rate over the long term. Property appreciation is generally, it's a long-term investment that offers one-time payout when the property is sold. And I want to put a little bookmark in here because I think that when you're an investor, you have to kind of decide if you're going to buy for appreciation or for cash flow. The mistake I see some investors make is they go in wanting to hit both. I want to get a property that cash flows. In other words, I'm earning a return every month, but I also want to get long-term appreciation. And my advice to investors starting out is pick one. Pick one. Be okay with breaking even or maybe even negative cash flow in order to get that long-term appreciation, or buy the property specifically for cash flow, trying to hit a certain cap rate or a certain ROI, return on your investment, and be okay if the property doesn't appreciate because you know you're getting a return based on cash flow. But some people buy specifically for property appreciation. Traditionally, if you're buying on the coasts, if you're buying commercial property, you're kind of buying for the long-term appreciation. Or if you're buying a piece of land, maybe we have a lot of timber in South Central Virginia. Those investors are buying land, planting trees on it, playing the long game, knowing they'll harvest those trees will be harvested in 20, 25 years. And so they're buying for the appreciation of the land and obviously the timber on it at a one-time deal, decades down the road. The other types of way you can earn money as a real estate investor is rental income. And this is for predictable regular cash flow. So going back to the cash flow thing, passive income, you buy a property to rent out. So whether it's either through long-term leases or short-term leases like Airbnb, vacation rental type properties, you see this a lot on vacation markets like on the coasts or in mountain towns. Lynchburg has had some success with some investors buying in Lynchburg, doing Airbnbs recently too. So by choosing this investment strategy, it means you become a landlord, which makes you responsible. It makes you responsible for collecting rent, making repairs, maintaining the property. If you're doing short-term rentals, you're responsible to keep the utilities on. You're responsible to make sure that the unit's cleaned and in great condition when your tenants leave. And you can also work with property management companies to manage your rental investment property, but you're looking for that rental income. You're looking for that monthly or even weekly checks coming in. And then another way you can invest in real estate to make money is what's called flipping houses. That's grown in popularity a lot due to some television shows. They make it look really easy and lucrative to make money flipping houses. Basically, you try to buy homes that are run down or that are outdated, and you want to get them at a low price for the local market. So you're seeing upside potential. Then the home is renovated quickly, as quick as you can, and then you sell at a high price. So flipping houses can have big profits, but a lot of people get in trouble because they overpay for the house on the purchase side, and then they get into repairs that are over what they anticipated. And it's just important if you're going to get into that game, you have really good relationships with really good contractors who can help you make estimates of the costs that are realistic and also make those repairs at a reasonable price. Another way you can invest in real estate is real estate investment trust. So this might be the one way that you could possibly have more of a passive approach to real estate. So if you don't want to own the property, but you still want to generate income from the real estate market, you can invest in REITs, which is real estate investment trust. They basically act like mutual funds for commercial real estate. Typically REITs, they're owned by a company that owns or finances commercial property. So you and many, many other individuals are investing in this REIT, again, real estate investment trust. It's a publicly traded companies. They are publicly traded, and it makes it similar to investing in the stock market. If the REIT makes money, you earn dividends, which you can cash out or reinvest. The upside of investing in REITs is that they don't require a large upfront investment, and you can earn regular dividends. However, you won't get the benefit of property appreciation, and you will be subject to the taxes from that cash flow when you cash out of your dividends. It's almost like investing in a stock, getting the cash. Okay, now it's a taxable income stream. And I'm going to just mention one other as well that is a little bit more complicated, and that is called a syndication. And these syndications they have some limitations on them. You can legally invest with a pool of other buyers on a property where you are a part owner. But in order to do a syndication legally, you have to be an accredited investor. And there's some laws around this. I'm not a CPA, but I do know that to qualify to be an accredited investor, you have to have a net worth of at least $1 million outside of the property of the value of your home, or you have to be a high income earner. And I don't remember the specific number, but I want to say it's around, I know it's at least $250,000. I think it's around $300,000 annually net that you have to be earning to be considered a accredited investor. And what that allows you to do is if you find a property that's maybe let's say you find a Smith Mountain Lake property that's $2 million and well, this is not a good example because, but you could go in with 4 of your friends and buy that in 5 different individual names. But basically a syndication is more like if you have an apartment building and one sold recently in Lynchburg, it was 110 units. I think it sold for like $7.5 or $8 million. And what happened was there was an outfit out of Northern Virginia that created a real estate syndication, created a company, and they started soliciting or proposing this idea of buying this apartment project for other accredited investors. And as an accredited investor, they required a minimum of $50,000 investment. Some people put $50,000 in, some put $400,000 in, and then proportionately they're receiving dividends quarterly as that property is profitable. So syndications are another very popular way to invest in real estate. So hopefully that gives a little bit of clarity as to some ways you can make money as a real estate investor, again, through appreciation, through cash flow, through flipping houses or flipping properties, whether it's land, apartments, housing, single family, multifamily, doesn't matter. You're buying it with the intent to sell quickly, short term, getting the gains from that and moving on to the next investment. And then real estate trust. And fifth is syndications. So when we come back, we're going to talk about 5 skills that will help you find success as an investor. We'll continue this conversation in the second half of the show. Welcome back to the Carl Miller Show. I'm Carl, your host, principal broker at Carl Miller Realty. You can follow our social pages. Sierra, our creative director, continues to put out good, engaging content. Our social handles are at Carl Miller Realty. And you can follow us on YouTube as well. You'll probably learn something. You'll get the opportunity to interact with us. And you can enter for that Independence Day gift basket, which includes a Pelican cooler, perfect for your summer outings. And as you watch fireworks, maybe be the winner and you won't be disappointed.
It's time for Carl Miller Realty's Local Stat of the Week.
The most expensive property for sale in Greater Lynchburg right now is a spec apartment building project with 240 units. It's known as the Epiphany at Blue Ridge Commons. There's 240 meticulously designed luxury apartment units that are being built. Construction and lease up is soon to begin. The community is strategically priced with a conservative 6% cap rate. So we'll talk about that in just a second. What that means comes in $5 million under market value. This property is listed by Divine Fog Realty. It's listed for $55 million, and it's our most expensive property. So, this would be a type of property we're talking about investments that it might be good to run some numbers on and then look at the feasibility and is this real or not? And it's a property to evaluate.
You want to go in on a $55 million apartment complex?
We talked about syndications a little while ago. This would be a prime property for a syndication to buy. And then the investors would be looking at this and saying, does it make sense? Are these numbers real? Those are kind of what you have to look at. And is the demand in Lynchburg enough to be able to lease out 240 units for the projected prices? That's the question. Is the demand there?
I will say if we both go in together, though, I'm
Yep.
about $55 million short.
Well,
So
I'm
do
not-
with that what you will.
So again, I think all we got to do is just get about another 400 or 500 people to syndicate this deal, and it's a doable thing. We were actually talking off air about syndications and how they're a great way to get into real estate if you meet the qualifications of an accredited investor. But the challenge sometimes is that these syndications they'll borrow 70% or 80% from a bank, and then they'll borrow the remaining 20%, or sometimes they over leverage and they'll borrow 30% from private investors. And then what happens if the numbers don't work out? What happens if the rents aren't the projected, like if you were expecting to rent these units at $2,000 and now the market's saying we can only get $1,600, well, guess what? You're running a negative cash flow. You're not able to meet the expenses. Then what happens? The money runs out and now they're making capital calls for the investors. And what can happen is things can go sideways sometimes on these syndications. Now, the other thing can happen too, where you make an investment into a property that has upside. I mean, we have a property for sale right now in Farmville. It's a trailer park, and it's listed for $430,000. I ran the numbers on this, running a very conservative cap rate. This property has upside of easily $1 million after repair value. But to get it, you're going to have to come up with a loan. I mean, assuming you don't have cash of, say 70% loan to value. You're going to need another $200,000 to $250,000 of cash out of pocket to get the property, what I call stabilized. Get it fixed up, rent it out, get the rent stable. And then once you show that cash flow, which will bring in, honestly, pretty easily $150,000 or more a year, then you could refinance it or you could flip that property and probably sell it for well over $1 million. But what I'm saying is you're going to buy this property for $430,000. You're going to spend another $200,000 to $250,000. It's still worth the risk, in my opinion. And honestly, if it was a little closer to Lynchburg, I'd be a very interested buyer. So back to your question. Yeah, let's all go in together on it. All you have to do is pool enough money with accredited investors, and this would be a way that that this property could work as an investment property.
Yeah.
So
It sounds like a great opportunity.
it's a good opportunity for somebody. And sometimes people just need to deploy capital. Like, somebody sells a business and they have millions of dollars they're sitting on, and they can redeploy that capital to work for them. So typically these large apartment buildings usually are being bought by accredited investors, or maybe a REIT fund will start, and or maybe there's a REIT fund established. They'll look at this, and Wall Street money will come in and say, this looks like a pretty conservative place to buy in Lynchburg, Virginia. Rents are stable. The economy's stable. It's not dependent on one industry. We can get our investors a return of 5 or 6%. That's all we're looking for. It's safe, and so those types of funds will buy these types of properties fairly often as well. So yeah, that's a little side note there. Let's talk about 5 skills that will help you find success as a real estate investor, and one of them is just familiarity with real estate terminology. So there's a lot of jargon and terminology, and I would just say this: if you're thinking about buying investment property, become really familiar with it. So look at some terms. And so terms, I'll just throw a few out here. There's so many, but cash flow. Cash flow is one that you'll hear a lot. And that's calculated by the amount of money generated by a property minus the operating costs and expenses. So operating costs and expenses. Don't forget about taxes. Don't forget about insurance. Don't forget about utilities. Vacancy rates. A lot of people forget to factor in vacancy rates. You want to, if you have a property that's generating $10,000 a year, for example, you probably want to factor in a 5 to 10% vacancy rate, because when a tenant moves out, most times you're not putting a tenant back in the very next day if you're doing long-term rentals. So cash flow, that's a term you'll hear a lot. Become very familiar with it. Due diligence, and that's when you're buying an investment. It's important to do your research about the property. So this is typically when you're buying a property, you do a contract, you do a due diligence period, and that includes reviewing the documents, estimating your operating expenses, and evaluating risk. Those are all things you want to do before you close on it. And maybe you're doing some environmental studies. You're doing inspections on the property, like physical condition inspections, making sure the septic system is working. And if it's connected to a sewer line, maybe you want to run a camera down there, just make sure that it's not clogged up or it's not going uphill. Things like that could cause major expenses after the fact, or even just something as simple as heating and air conditioning systems that need to be replaced. Had a client bought a fourplex recently, bought a 4-unit complex, and in the inspection contingency period or the due diligence period, we found out 2 of those heat pumps needed to be replaced. And so we went back and, it's a $20,000 problem, right? So we go back to the seller and we renegotiate terms and renegotiate repairs. So due diligence. HOA, probably most of the people are familiar with that, Homeowners Association. So this is the organization that oversees the physical appearance of many neighborhoods. There's rules and regulations. If you're subject to an HOA, you want to know what the rules are. You want to know there's no surprises. Virginia allows you 3 days to review that HOA packet. You get the packet. You have the opportunity to review that, make sure that there's no surprises in there and you still want the property, any special assessments, all of those things. Turnkey property is another term you hear thrown around. That's a property that's move-in ready. So turnkey means move-in ready. Some investors like to buy properties that are far from move-in ready and get them move-in ready, especially home flippers. That's what they're doing. They're buying properties that are not turnkey, putting work into it, and then selling those for return on investment when it becomes turnkey. A formula you're going to hear a lot about, and this is kind of a good one, is cap rate. Know what the cap rate is. So cap rate equals the net operating income divided by the purchase price. So the key there is net operating income, NOI, divided by the purchase price, not the gross operating income. So, a higher cap rate, 8 to 10%, it usually means higher potential return, but often higher risk. A lower cap rate, 3 to 5%. Usually means lower risk, strong markets and expectations or expectations of appreciation. So, so if you do an example of this, if you have a net operating income property of a property you're evaluating, and let's say it's $10,000, let's say $100,000. Let's say it's an apartment building, and you're getting $100,000 net, and the purchase price is $1 million. That's a pretty good cap rate. That's a 10 cap. So I can promise you that apartment building probably has some higher potential return, higher potential risk, I should say, because of that higher cap rate. A really good stabilized Class A type apartment building will be selling at a cap rate, much lower than that. So, 3 to 5%, 6% is a pretty good cap rate, just as a general rule. So that's kind of one. Know some terms. Inspection contingency is another term you want to know about. A couple other things to be aware of, and that's be willing to make long-term calculated decisions. Be willing to make long-term, play the long game with real estate. It is not a short game unless you're doing flips. And, we got more things we could talk about with this, but I think that those are probably a couple things to just be very aware of if you're a real estate investor or you're getting into the market a little bit. And it helps if you have some soft skills. It helps if you have some good communication skills, good negotiation skills. Those types of things will play to your favor too as a real estate investor. But always look through it, run all the numbers, make a calculated decision because it is risky. It's also very rewarding.
It's time for Carl Miller Realty's Fun Fact of the Week.
Home ownership is one of the biggest investments that people make. For many people, a home is more than just a place to live. It's a long-term investment in their future. As you build equity over time, home ownership can create financial stability and provide opportunities that renting often cannot. Beyond the financial benefits, owning a home gives you the freedom to personalize your space, put down roots in your community, and create lasting memories for years to come. And it does appreciate, typically, especially in Lynchburg. Well, if you have real estate questions you want answered, contact us. You can hit our social media platforms. I want to thank our sponsor, Gary's Garden Center. Curb appeal, it's important, and Gary's Garden Center, they've got hanging baskets right now for you. If you're not sure what to get, the team there will be happy to point you in the right direction. Leesville Road, stop by today. Our social handles are at Carl Miller Realty. Thank you for listening. We are your caring, competent, trusted advisors for real estate sales. You can contact us today for your specific questions or needs. Have a great weekend, everyone. We'll see you next week.